Navigating the path to homeownership can be overwhelming, especially with all the misinformation out there. In this episode, we will help you set clear, realistic goals for purchasing a home and identify common obstacles that could stand in your way. We want you to avoid costly mistakes and move forward with confidence. Whether you're a first-time homebuyer, an experienced homeowner, or a real estate professional looking to sharpen your skills, this episode's for you. Also, stay tuned in as we have a free tool that we will give you to assist you in your home buying journey. Don't forget to hit subscribe and give us a like so we can keep helpful content coming. So, Lindsay, this is a great topic I'm really excited about.
Yeah, I actually love this topic because it's so funny. I get this question all the time, about people that are looking to purchase. And it's not just for first-time home buyers. It definitely resonates with people that are seasoned professionals in the business as well as people that are seasoned homeowners as well. But one of the most common questions that I get is, do you need to save a lot of money to purchase a house or for your down payment?
That's a great question. And it's a thing that our industry has not done a great job with.
Very true.
Letting people know, because everyone thinks, I can't afford a home because I don't have the 20% down payment.
Yeah.
And so many people think that you have to have 20% down, that it discourages them right off the bat and they move on to other things.
Yeah, that can be an overwhelming number, especially for first-time home buyers.
And it's such a shame because home ownership is one of the biggest determinants of wealth in this country. The majority of people store wealth in their home equity, right? And if you don't own a home, you don't have that home equity.
Yeah.
So your question is, how much do I need to save for down payment, right? All right, so let's go. If you're a veteran, an eligible veteran, you don't have to have a down payment, right?
Right.
It's 100% financing, and you don't have. There's no down payment requirement. That's a benefit. One little way that we say thank you for serving our country, right?
Thank you for your service.
So if you're not a veteran, the next lowest down payment is if you're in a rural area. A rural area, that's a tough word to say. USDA loans, the same people that stamp your beef.
Yep.
They back loans. They're government-backed loans called USDA, 100% financing, no down payment required, but for eligible qualified eligible qualified borrowers, and 100% financing, no down payment. So
Awesome.
what about the rest of us, right?
Yeah.
That if you're not a veteran, you don't live in a rural area, what is the down payment requirement? Well,
Sure.
if you're a first-time home buyer, Fannie Mae and Freddie Mac, you might have heard of them. They're
Yes.
the big quasi-governmental institutions that back a lot of the majority of loans done in this country. Well, they say, look, little as 3% down. So it's the lowest down payment requirement outside of USDA and VA, that I know of out there. There might be some other niche loans that might do better, but for the masses, 3% down is the minimum requirement for those big ones. Now, FHA, you've heard of FHA?
I sure have.
Right.
When I bought my first house, I actually thought it stood for first-time home buyer.
Well, first-time home buyer, right? And FHA stands for Federal Housing Administration.
Yeah.
And it's not necessarily a first-time home buyer program, but it's a great program. It's 3.5% down, so a little bit more of a down payment than a conventional conforming loan, but has some great features that might work well for some borrowers. And then, for outside of, and that doesn't have to be a first-time home buyer program.
Nice.
So, if it's your second, third home, and first-time home buyer is really defined as you haven't owned or been on title to a property in the last 3 years. So if you owned 5 years ago but sold it and haven't owned a home since, you're still considered a first-time home buyer.
Interesting.
The otherwise, might be 5, 10%, all the way up to 20% down payment is out there.
Yeah.
So minimal down payment really required 3% if you're not a veteran or live in rural areas. So lots of options for the masses.
Definitely less overwhelming.
Than
people initially think.
And here's another piece of it. That down payment doesn't necessarily 100% have to come from you.
Where else could it come from?
Yeah, good question. So it can come from as a gift. You can have an eligible gifter that might be a parent or a spouse or someone
In-laws.
that's living with you, in-laws, right?
Okay.
Can give you a gift for down payment. So it can also come for, let's say you have a lot of money in a 401k. A little known fact is that you got to check with your plan advisor and make sure it's acceptable and
This
allowed.
is not financial advice.
Not financial advice. You might want to check with your financial advisor and your CPA or your CPA or the interwebs. But I can tell you that there are some abilities to borrow against your 401k and pay yourself back plus interest with possibly little to no tax implications. So you have to check. I would check with all the appropriate financial advisors and CPAs. But that's an option. You can borrow money against your 401k and pay yourself back the interest. So great option also out there.
Yeah. Well, what steps should I take, or anyone that's purchasing a house to save for their down payment while also managing other financial priorities? Because the other bills don't stop just because you're saving.
Okay. So a couple things. Number one, you got to have a good budget, right? You have to know all your costs and be realistic about this. Know all your costs, know where your money goes, and then see where, like, can I save money over here and pay over here? Now, number two, don't stop paying your bills. All right. I've seen this where they say, well, I had to save for down payment. I'm like, you still have to pay your credit cards, your car payments, your student loans, all your bills. Now, you might pay a lower amount on your credit card, or don't rack up the debt.
Right.
But you don't stop paying, because if you stop paying on those bills, your credit's going to go down. If your credit goes up, your borrowing costs, your interest rates, most likely going to go up, right? And credit's a very important factor in getting a loan.
Gotcha. So how can I figure out what I can realistically afford when purchasing a home?
Okay. All right. So if you want to figure out what you can realistically afford, we got a great calculator that I have up here on the screen. And I'm going to give you a link down below to this calculator, so you don't have to go fishing around for it. But this is a great calculator. Now, this is an affordability calculator. It's for demonstrational purposes.
Yeah.
This is not financial advice.
We're not quoting you.
We're not quoting you interest rates. We're not quoting you mortgage insurance.
Yeah.
We're just giving you an idea. And this is something you can play with on your own to figure out, does this make sense for me or not? All right. And so we're looking at a conventional loan, which is anything that's not a government loan, Fannie Mae, Freddie Mac. Let's just pretend you make $8,500 a month. Maybe you and your spouse combined, or you yourself, and that's your income. That's your gross monthly income. So that's not what you take home. That's what the gross check is, even though we know that's not the case. But that's what lenders look at to qualify you for a loan. Let's just say you have monthly debts of $750. Now that's not your groceries or your cable bill, but that's things that would show up on a credit report. Monthly debt obligations such as student loans, credit cards, car payments. Let's just put $750 in there. If you have more or less, you can slide the dial either way. It's very easy to use. Home price, $450,000. Okay, that's the house you're looking at. Down payment, again, you can slide this around, but we're just going to use 10%. So you would have mortgage insurance because you're putting less than 20% down, but it's going to factor that in. So your loan amount's $405. Now, this is not a quote. This is just for demonstration purposes. But let's just say the interest rate's 6.5%.
Sure.
All right. That might be the rate today. It might not be, but it's not a quote. Credit score. Let's just say you're in the good rate of 720 to 739. If it was 740, it'd bump you up to a slightly better range, 780 also. But let's just say you're in that 720, 740 range, so good credit. You're in Florida. This property tax number might not work for your state, but let's just say it's about $4,095 a year on taxes. Homeowners insurance, I can tell you for where we live, this is very low, but for some places, they're going to look at that and go, oh my gosh, that's expensive.
Yeah.
Let's just say it's $1,500, $1,575. Your mortgage insurance, $155. So it gives you a total payment of $3,187. And this is how that breaks out. $2,559 for principal and interest, $341 for taxes, $131 for insurance that you don't live in an HOA, and $155 for primary mortgage insurance or mortgage insurance, private mortgage insurance. Sorry. If you like this, you just hit the email me this, and I'll send it to you so you have that information.
Oh, nice.
If you would need to reach out, it says contact us here. And for those of you listening and not watching, there will be links, no matter where you're hearing this, down below to all this information you can use on your own. And this kind of gives you a realm. This up in the right-hand corner, it says debt to income ratio, 37.46. That means 37% is if I take my housing payment and divide it by my income, 37.5%. If I take my housing payment and my monthly debt obligations and divide it by my income, that's a 46%. This is in the realm of reasonability, right? Reasonableness, whatever the word is, that says that, this could be allowable, right? Yeah. It might fit in. Now, I say might because we have to verify your income, your assets, your credit, and make sure it fits within all the rules. But this, as rule of thumb, looks good.
Yeah.
So you can tell. Now, I'd encourage everyone to play with this calculator to see what makes sense for them, right?
So you give great information there on basically it being an estimate, which kind of brings me to my next question. How do mortgage pre-approvals work? Because this is not a pre-approval, but if let's say I liked what the calculator said and I'm like, all right, I want to go shopping. How do mortgage pre-approvals work? And how do they help when setting realistic home buying goals?
Okay. So look, mortgage pre-approval is a little bit different than this. This is a pre-qualification that you did yourself that really won't hold up, if you're trying to say, hey, look, I'm good to go.
Right.
The first thing is this is a tool to use, but you want to still talk to the professional, the mortgage loan originator, a licensed mortgage loan originator local to the area in which you're doing business for the most part. If you're doing business in Florida, you really don't want to be talking to someone in Michigan or California because they might not know all the nuances in Florida, right? Mm-hmm. So talk to a licensed mortgage loan originator to make sure that you do actually qualify and you're not putting in super unrealistic things about income, assets, and credit and understanding what payments look like because, the rates might be higher the day that you're buying or lower than what we talked about here or what you think you can qualify for. So the pre-approval takes this several steps forward, but not hard. Have the conversation with that licensed mortgage loan originator. They're going to look at it and say, okay, looks good. Now let's collect some documents. Yeah. And if they don't collect documents from you, it's not a pre-approval. All right.
Gotcha.
And then they're going to take those documents. A good lender is going to have the underwriter review those documents, not the loan officer. So ask them the question, is an underwriter, not a computer underwriter, not what they call a desktop underwriting or an automated underwriter, an actual person going to review my documents to make sure everything makes sense. Yeah. So I don't go out there wasting my time looking at houses.
Offers, right.
Spending money,
time
and money. I mean, if you qualify, you want to know that. If you don't qualify, I would suspect you'd rather know that and what you need to do to get qualified.
Yeah.
But if you don't have the loan originator send it to an underwriter, you're having a salesperson give you a determination on your future.
Yeah, that might be a big mistake.
Right. And then when it gets to the underwriter, they might have a different opinion.
Yeah.
So make sure it goes to the underwriter for pre-approval. So the big difference between a pre-qual and a pre-approval is a conversation versus actual.
Gotcha.
That's been verified. So I would lean towards a pre-approval. That way, a good loan officer, mortgage loan originator, will give them advice to say, well, if you don't get qualified, here's what you can do. Or here's some other options about your total picture. Maybe we don't put as much down and you use that to pay off debt or something like that to have a total picture that's way better when going in to buy the house.
That's a great tip to avoid mistakes. And kind of speaking to the mistake side of things, what are some of the common financial mistakes that people might make when setting home buying goals, and how could you avoid them?
Well, the first mistake that people make is they fail to establish a realistic budget. Okay. So they say, I think I can afford this, which goes into another piece is they overestimate future income and say, well, I think I'm going to make more money, or
I'll get a bonus this year.
Right. I'll get, and that may or may not, you shouldn't qualify yourself on things you get sometimes, like overtime or bonuses. You can, but if it's realistic and has a long history of it.
Sure.
But I personally wouldn't bank on those things, right? They don't consider all in monthly costs, right? They might look at they might go into a subpar calculator online. Not ours. Ours is good that has these things built in. The link for that is down below, by the way. But they might look at a subpar calculator. It just gives them a principal and interest payment.
Yeah.
Well, they failed to bring in taxes and insurance, and those can be thousands of dollars that you really want to factor in your costs. So if they don't do that, that's also a mistake. Not accounting for upfront expenses. There are costs to buying a home. You have to do inspections, appraisals that you're on the hook for, regardless if they come through or not. And so those are, you got to think about the time expenditure.
Yeah.
I'm going to spend Saturday and Sundays looking at houses. You want to make sure you're approved before doing all that. Repair costs, another big one. Houses have air conditionings, roofs, paint, plumbing, electric, that can all have problems. And if you've
unforeseen stuff too. Yeah.
Unforeseen stuff. And if you've rented a house for many years, your landlord was paying that. Now you were paying your landlord's mortgage.
Yeah.
They were the ones that was they were benefiting from the equity you were building for them and the appreciation the house was having. But, they were paying those little things. But just, set aside in your budget money every month that goes towards an account that can pay for things you don't expect. That's the best advice I can come to give you there.
Yeah. Solid advice. I think my favorite thing was the mortgage calculator. So I'll be sharing that today with some people.
Did we say mortgage calculator enough?
Mortgage calculator.
Yeah. Well, look, that's it for today. If you're thinking about buying a house, I hope you found this information useful. If you are still here, please hit the like button. And if you're not a subscriber, subscribe. Share this with someone who might find a benefit in it. And check out that mortgage calculator below. If you have any questions whatsoever, give us a call. We'd love to help you out.
Yeah.
There's contact information below. Thank you, Lindsay, very much.
Thanks for having me.
We'll see you next time.